Bonjour, buongiorno, grüezi, and good afternoon, dear business partners of Coface Switzerland, dear guest speakers, dear Kaspar. Thank you very much for joining into our webinar this afternoon. My name is Peter Schnorf. I am the Commercial Director of Coface Switzerland and very delighted to welcome you to our 9th Coface Country Risk Web Conference. Well, it is this time of the year when Coface Switzerland usually organizes its physical Coface Country Risk Conference. So obviously, circumstances all around COVID-19 forces us to do something different, a shorter event in form of a web conference. The good news with this new setup is that we could attract a record high number of participants. More than 160 partners accepted our invitation. Many thanks to your interest shown. The bad news on the other side is that we are unfortunately not able to network with you after the event. So let's hope to catch up with you very soon from now. The COVID-19 pandemic we currently experience triggered the first global recession since the great financial crisis back in 2008 and 2009. The global lockdowns caused an unprecedented shock on all economic activities, on global trade and supply chains. And yet, daily business must continue, and it is more important than ever to have reliable analytics and information available, which help us to make the right decisions for our businesses and to overcome the current challenges in the best possible way. Our keynote speakers and proven experts in their domains are fully motivated to contribute and to share with you most interesting insights all around the global pandemic crisis we are currently facing. In the name of Coface Switzerland, let me thank you once again for being here with us. It is a pleasure to hand over the mic now to our esteemed moderator, Kaspar Loeb, who will guide you through the afternoon program. Thank you very much, and please enjoy.
Thank you so much, Peter, and a very warm welcome also from my side to this first online Coface Country Risk Conference. My name is Kaspar Loeb, and I will be moderating today's event. The format itself shows that the world has changed dramatically in the last few months. Normally, we would meet, discuss, network, and have a drink afterwards in a nice setting, like in the middle last year. Not today in Corona times. Therefore, the pandemic and its consequences will be our focus today in this conference with the title, How to Manage Risks in a Global Pandemic. If I look back at our last conferences, we were discussing the Trump presidency, Brexit, free trade and protectionism, and the integrity of data. The interesting thing is we thought that something cannot get worse. We were obviously wrong. No one could have predicted that the biggest pandemic in recent times would change the course of our economy and society. There were warning signs, but we didn't take them seriously enough. So the questions of today are, what will be the impact of a still unpredictable pandemic on the economy, the different industries and regions? Who are the losers, but who will also benefit from the pandemic? Julien Marsili, Group Chief Economist of Coface, will give us later on some insight to this topic. What about the global value chains and the globalization at large? Is this the end of globalized economy? And what impact has the pandemic on a very globalized country like Switzerland? An answer to this and other questions will come from Tobias Straumann. He is economic historian and titular professor at the University of Zurich. And last but certainly not least, how does Corona change our behavior? How can we better prepare for future pandemics? And are there other even worse viruses on their way? To these questions, Philippe Tarr will give us some valuable insight. He is professor and works at the Infectious Diseases Service at the University Department of Medicine at the Universitätsspital Basel and the Kantonsspital Basel-Land. He will join us later because you can imagine how the second wave is really taking him a lot of time, and we are very grateful when he can make it afterwards as the third speaker. Before we begin now with our first speaker, I want to point at the bottom right side of your screen where you find a space for your questions, so Q&A. You can write your questions during the whole conference, and I will read them after our panel discussion and put them to the respective panelists. So let's start with the first speaker. And it is a tradition of the Country Risk Conference that we start with the Coface Group Chief Economist, Julien Marcelli. In his economic outlook of today, he will talk about a differentiated recovery. I always could say, Julien, the floor is yours. Now I can say, Julien, the screen is yours.
Thank you, Caspar. I hope you hear me well. I'm very glad to be with you, even if it's virtually only. As Peter was saying, I mean, this is now a well-known event, and we meet every year. And since we meet on a yearly basis, usually what I like to do is to check if I did well the year before in terms of forecast. And obviously this time there's something very important we missed last year, as Caspar was saying, because I mean 1 year ago, obviously, I mean I didn't expect as an economist I would have to monitor this type of data on a country by country basis, looking at the number of new cases of COVID-19 on a daily basis almost, the number of casualties, unfortunately, too. So, I mean, we now have to start with that, I mean, because all the economic outlook, globally speaking, is now driven by the sanitary situation, as you know. So where are we in this regard? I mean, first, let's start with good news, because there are some, not so many. The paradox is at the moment in the southern hemisphere, we see some good news, especially in Latin America, where this is to some extent the kind of the end of the first wave. With the summer is coming there, and we see the situation from a sanitary standpoint improves and a little bit. Having said this, this is the end of the first wave, so it is very likely that even in this type of country, they will follow the same trend as we are in Europe, with a 4 to 5 months trend lag. Sorry. And so where are we in Europe and in the US? I mean, you know it well. Now we have been surprised on the downside by recent developments at sanitary level, with different magnitudes, but the trend is quite the same in almost all countries. And I would say that even in the US, with a 2 to 3 weeks lag, is going to be the same. Governments have to decide some renewed tough measures in terms of lockdown, and this is definitely a key issue, because you remember last time lockdowns and stringency measures had a great economic cost. So it's going to be pretty much the same this time, even though at this stage measures that have been announced in some European countries, including Germany, France, Italy, the UK, and some other ones, have been softer than during the first wave in March and April. But nevertheless, I mean, you see it on the chart here on the left. I mean, countries that implemented at that time, during the first half of the year, the stricter measures in terms of stringency, are also the ones that suffered the most regarding the economic situation. So, having said this, it looks like it's very negative for sure. The only one positive thing at this stage is that it looks like different, because last time during the first wave of let's say lockdown measures, I mean, all businesses were closed, so we had both supply side issues for businesses and demand side issues, because of course shops were closed too. This time could be a bit different, because now in almost all countries, even though the second wave is faster than expected, it is very likely that businesses in a lot of countries will remain open this time, and borders will remain open too. So we can expect much less issues regarding value chains, regarding global value chains, than the ones we recorded earlier this year. On the supply side, this is the good news, but the bad news is that on the demand side, I mean, consumption will be dragged down by the closure of shops and by precautionary savings. And this is a learning of what we've seen in recent months. After the first lockdowns in April and May, the good news is the recovery was quite fast in May and in June in Europe and in the buying. There was, let's say, a short-term euphoria, but then, as you can see on the chart on the right, the momentum faded quite fast during the second half of the third quarter, and obviously the fourth one of the year, so the last one of the year, is now expected to be even worse because of these renewed lockdown measures. In addition to that, as I said, our the biggest issue in terms of credit risk is not anymore what's going on the supply side, because businesses are open. The biggest concern is what's going on the demand side, because we start to see the negative impact of the pandemic on employment. You see the example regarding with the US on this chart. And the consequence is that since unemployment risk is now higher in almost all countries, consumers prefer to save instead of consuming. And that's the biggest risk for businesses in the months and in the quarters to come. Because on the one side, they are forced to save if shops are closed, and on the other side, even when shops reopen, in some cases they don't dare to consume because they prefer saving because they don't know when the situation is going to improve. Obviously, this is a very general comment. This is a macro picture, and the situation is very different from one sector to another. At global level, so then the situation can change on a country-by-country basis. But I would say that according to us, at global level, we can distinguish three types of sectors, and you can see them on the chart, which is on the left here. The first category, let's say the worst ones, are inside the orange bubble. In those sectors, we see all sectors that have been highly impacted, significantly impacted during the first round of lockdown. And in this sector, in this category, you find two types of sectors. The first one is, of course, businesses that were already weak before the crisis, meaning sectors we were already talking about last year during the previous countries conference. And last year, if you remember, we talked a lot about the automotive sector, we talked about the metal sector, just to name a few, and of course as well the retail sector, which were already facing a number of structural challenges. Now, in this category, we had some other businesses that are in the heart of this mobility crisis driven by the sanitary situation, transport, energy, of course. So when you combine all of it, you get all these very risky sectors, the ones that are heavily, significantly affected by the crisis. Then the second, let's say, category of sectors is inside the green bubble in the center of the chart. And in those ones, you find construction, chemical, and some other ones. Those ones, they're usually, let's say, to be simplistic, in the middle of the pack. They have been affected by the crisis, but not as much as the ones I've just talked about. And then, outside of the bubbles, which is pharmaceutical sectors, agro-food, and ICT, electronics. And those are the ones that are less affected by the current crisis. And even in some segments, they're benefiting from the crisis. So all in all, the situation is very different from one sector to another. And as a credit insurer at Coface, I mean, what we've done in recent months is to try to make various central baseline and risk scenarios on a sector-by-sector basis, as you can see on the chart on the right. And then we have used those assumptions, those outlook on a sector-by-sector basis to make our GDP growth forecast at macro level. And you see what the outcome on both charts. So of course, I mean, we expect a deep recession in most key economies in Europe and in the US, as you can see it on both charts. Then, unsurprisingly, we expect a significant rebound in 2021. I have to say that this second wave is surprising us on the downside, so perhaps we will have to revise down those forecasts you see for 2021 a bit on the downside. But beyond this down and up, I mean, the biggest underlying idea behind this is that you have to keep in mind that most of the rebound we expect next year is going to be kind of a technical rebound, because we will start from a very low level. And the key idea is that at the end of 2021, in the US and in all countries in Europe, we will not be back to pre-crisis levels in terms of GDP level. So it means that we will need at least 3 years, and even in some cases 4 years, to go back to the situation where we were 1 year ago when we met in person in Zurich. So that's the macro picture, and in this very gloomy environment, the paradox is that we should see many more business insolvencies. On the charts on the top of the slide here, you see this is our forecast in terms of business insolvencies, the total expected number of increase of business insolvencies on a country-by-country basis that results from our usual statistical model that links GDP growth on the one side, on a country-by-country basis, to business insolvencies. So in other words, usually when GDP growth goes down, of course business insolvencies goes up. And you see the outcome of this very simple statistical model on the top. But the paradox is, at this stage, we don't see many business insolvencies in the world, despite the very gloomy economic picture. And you can see the confirmation inside the green bubble, which is in the bottom of the slide in the table. Why this paradox? Because of all government measures, all central banks measures that have been decided since the starting of the year. And this is definitely the good news this year. Central banks, governments have been much more reactive, much more effective than they were during the previous crisis. So if you remember in February and March when the crisis started, I mean, a lot of people were expecting for businesses a tightening of credit conditions, a kind of a credit crunch like the ones we recorded in 2008 or 2009. And finally, the situation is very different because of these all granted loan programs, because of furlough schemes in a lot of countries, even in some cases because of temporary changes of business insolvency procedures. And you see here in this table the situation on a country-by-country basis. Because of all of these type of support programs, businesses at this stage did not fail. The big question is it going to last because of this second wave of the pandemic? Our scenario is that because of this second wave of the pandemic, of course, the government will continue to support businesses massively. So it means that in most of cases, businesses will not suffer from liquidity issues. But the biggest problem now is that more and more businesses, despite this, will decide to bankrupt, will decide to fail, because they will realize that in the coming months and in the coming quarters, they don't have any good outlook regarding their turnover. And if you don't expect any pickup in turnover and you think the turnover is going to remain extremely low because of this renewed stop and goes lockdown and then end of lockdown and then new lockdown, you prefer to bankrupt instead of continuing your business. So this is definitely the biggest risk for 2021, and that's the reason why, in the end, we keep thinking. As we show here, that business insolvencies are going to increase significantly by the end of 2021, despite all these support measures coming from governments. So in the bottom of this table, you also see that governments did a lot in many emerging markets. A little bit less, of course, than in major economies, but even in major emerging markets, governments decided to support businesses, of course. The biggest difference between emerging markets on the one side and major economies on the other one is that, of course, central banks in the emerging world are not as credible as the ones in Europe and in the US. So they can't necessarily put in place very significant quantitative easing, and they can't support so massively the financing of governments. So the big question now for a lot of emerging markets is that some of them will have to tighten their fiscal policy in 2021. And so we will see some cut in fiscal spending in a lot of countries, and this is very likely to lead to negative consequences in terms of GDP growth. But to make it short, because time flies, the big picture in emerging markets is that, of course, the situation is very different from one country to another. If we look at our GDP growth forecast, the aggregated variation of GDP that we expect between 2019 and 2021, because 2020 and 2021 have to be taken into account as a whole, then you see the picture with the top 15 countries, the top performers according to us, and you will see it's very simple. Half of them come from Asia and the other half from Africa. And on the right, you see the bottom 15 performers according to us, and half of them come from Latin America. This is no surprise, and you can add to them some bigger countries also in Africa, like South Africa or Nigeria. So this is a bit simplistic, but this is the key idea regarding emerging markets. And perhaps the last but not least point regarding the consequences of the pandemic is, of course, if GDP in 2021 will be lower than in 2019, it means that the size of the pie will be sustainable, will be lower, will be smaller during quite a long period of time. And if the size of the pie is smaller, it means that you can expect a lot of conflicts of repartition, of distribution, a lot of distribution conflicts in a lot of countries. So for those who participated to the previous years to the conference, you know that we have our in-house methodology to measure political risk at Coface. So I'm going to be fast. We have a lot of different pillars to measure a lot of different types of political risk. And the good news is, as this methodology shows you, that the risk of conflict has decreased a little bit in the last year. But on the other side, according to our methodology, the risk of social discontent in this environment is, of course, now much more higher than it used to be. And if you remember well, last year, we already said it was quite high. So just as a reminder, this index is driven by our measure of social frustration and the availability of tools to express this frustration in a given country. And according to us, countries at risk are the ones which are on the top of this chart. And this year, to measure, to have a better sense of the frustration in a given country, we have also taken into account the very specific context, which is the exposure to the COVID-19 crisis. And this is what you see on the x-axis. In other words, it means that we try to see if in a given country, people are likely to turn against their government because they're frustrated, because they think their government is not handling well the sanitary crisis. And you will not be surprised to see that a lot of countries in Latin America and South Africa, for instance, are at risk in this regard. So when we combine both our usual view of the social risk plus the specific context of this sanitary crisis, we get this situation where a lot of emerging markets, especially in Latin America, are definitely at risk. And when we do the same type of work regarding mature economies, you see that two countries are in the top of the chart. There are Spain and the US. You see France as well and Italy, and it's no surprise because they are the ones where the political situation is perhaps the most concerning. You saw some protests came up in Italy during the last weekend. The situation in Spain, you know it, and obviously you're also aware of what's going on in the US. So just to make it short, I mean, this crisis to me, it's like an accelerator of all the structural trends we were talking about last year. And political risk is one of them. It's like in 1 year, it's like if in 1 year we have seen all the risk.
Thank you very much for
6 years before. And it means that, of course, all the political uncertainties we were talking about last year are still up to date. So we will have the US election next week. Of course, a lot of things can happen. Our baseline scenario at this stage is that Mr. Biden is going to win the election, even though, of course, we can't be 100% sure because of the polls are not saying this is 100% sure, but nevertheless, the margin is much more significant than the one at that time that we in favor of Clinton 4 years ago. So now the biggest question is Donald Trump going to accept this outcome, or perhaps we will see some uncertainties in the days right after the election, because there will be some outcome in some states that will be known only a few days after the election. So even if Biden is likely to win, it doesn't mean there will not be any uncertainty. And then the other big question marks is regarding the outcome of the Senate election. But we could have a scenario where the Democratic Party gets majority at the Senate election, and the good news in that case would be that Joe Biden will be inclined to decide a big stimulus measure in the coming months, and he will be very able to do that. And of course, it would be a good news for the global economy in the first half of next year. Last but not least, almost like every year since 2016, even though the world is changing, some things don't change, and the Brexit issue has still to be addressed. And the good news for me is that I started this presentation by telling you now I have to look at some new data. These other types of things, I keep looking at the same, and I could have showed you quite exactly the same chart one year ago regarding the Brexit. So, I mean, the situation is pretty much the same. We keep expecting there will be a deal by the end of the year, even though it's not again 100% sure, because on both sides, the EU and the UK government are playing a poker party and they're bluffing. But in the end, they're likely to find an agreement by the end of the year, even though you see there are still some numerous areas of disagreement between the two areas. I stop here. I've already talked too much, and I leave you take a quick look at our country's map, even though Peter already showed it to you and Caspar is showing it on his back. And I'm sure there will be some questions and answers after the two other presentations. So I now leave the screen to Caspar, I think. Thank you.
Absolutely. I have two questions. Thank you so much for these information. And you can never tell us too much, by the way, Julien. So I have one first question. We talked about a so-called V recovery. After the first wave, a lot of economists were very, very optimistic and predicted a V recovery. Now we are in the middle of the second wave. Do you still think this is a valuable scenario that we have a V recovery?
I mean, yeah, first of all, I mean, a V recovery, we saw a lot of letters like U, L, V. Finally, if you look at one of the first charts I showed, it's quite simple. It's the situation. This is the one regarding Germany with industrial production. You see, it's not really a V, even before the second wave. Okay, it's not really a V. It's a kind of inverse square root. If you look at it, and I think it's a good summary of the situation before the second wave, like a kind of a recovery, but a partial one, and it will take time to go back to pre-crisis levels. And to tell you the truth, now the situation is the question is not anymore to wonder whether we'll have a V recovery or not. Now the key risk is a kind of a W. Because with this second round of lockdown in some countries, at least not necessarily in all of them, but we will see some countries falling back into recession no later than in Q4.
Speaker, something I found very interesting. You know, we are in Europe, we are in Switzerland, always very proud of how good we are, how good we manage things. Now, when I looked at your slides, it seems that Africa and Asia have weathered the corona storm amazingly well. Can we say that Africa and Asia, in a way, are the winners of these crises?
It's a kind of, the situation is very different from one country to another, even in those areas. To start with Asia, I mean, this is true. I mean, China does comparatively better than a lot of other economies. Vietnam, this is quite the same. It's not true for all countries. Like some other Asian countries are doing not as good as them, like the Philippines, Indonesia, and India, of course, are struggling with the COVID-19 crisis. But this is true for a part of the region. And this is also the reason why I started by saying this crisis is a kind of an accelerator of previous structural trends. I mean, Asia was doing better than the other regions. Now it's doing even better, and the spread is and the gap is spreading. Now regarding Africa, this is true. I mean, in a lot of countries, I mean, the population is young, so it helps. Plus, this is not the only one reason, but the continent and some countries in the region are used to deal with epidemic, and it's also the reason why consumers perhaps didn't overreact. That's also the reason why the health systems, that's the paradox, perhaps did a bit better than in other countries to some extent. But I'm not an expert in this regard. But even having said this, again, the situation is very different from one country to another. In countries like South Africa, for instance, the situation is really bad too.
Thank you so much, Julien. We will see us again afterwards in the panel. Now we come to our second distinguished speaker. It is Tobias Straumann. He is an economic historian at the University of Zurich, and he will take a closer look at the position of Switzerland in these corona times and the impact that this crisis has on a small, globalized country like we are. Tobias, it's a great pleasure and honor to have you here as a speaker. Again, the screen is yours.
Tobias, you're muted on your headset. Can you try again?
You see, we have a little technical glitch until Tobias can join us. It's always the same whether we find the microphone and everything is going on. So we hope.
Is it better now?
Yes, now it's
all right.
better.
Okay.
We have you.
Apologies. Thank you, Kasper, very much for having me. I want to talk a little bit about Switzerland, not just about Switzerland itself, but as a small, open economy in the middle of Europe, where which has a lot of ties across the global economy. Let's take a look at the first slide, at the first graph, where you see the GDP changes of Switzerland. Here they are. The gray area, of course, those are still estimates, and forecasts, but still, I think they give us
and it is more important than ever
next year. I think in the spring we were very pessimistic. We were afraid that as a small open economy we would really collapse. But now both forecasts of June and of October, and it's October 22, so it's only a week ago when the second wave was already underway. So it looks quite good. I mean, it's not even -4% real GDP growth during this year, and probably some catching up next year. So that's amazing. I mean, for a small country that 50% of GDP is exports, and 50% about is imports, so it's about 100% of GDP is import and exports together. It's amazing how small eventually the impact of the COVID crisis is. And I'm not talking about the forecasts in the short term, because that was Julian's job, and I think he has explained very well what the risks are. But nevertheless, I think this crisis is too short to be a paradigm change for the whole global economy. If you compare it with the Great Depression of the 1930s, which is kind of the benchmark for, let's say, political and economic catastrophes in the last 200 years, it's a harmless crisis, because during the Great Depression we had 4 years of negative GDP growth. The U.S. economy shrank by 25%, German economy shrank by 25%. You had persistent unemployment above 20%, and in addition, enormous deflation. So real debts just exploded. Businesses just became insolvent one after another. So we're not even near that scenario. The IMF told in the spring that this is the worst crisis since the Great Depression. That might be. You can argue that this is true, so it's not a harmless crisis, but I think it was unfortunate to relate it to the Great Depression, because people thought, okay, now we go again, and that's simply not true. So even if the recovery takes 2, maybe 3 years to get back to the pre-crisis level, at least I think in the next 2 or 3 years we're going to have constant positive growth rates, and that's much more important than the acceleration or the speed of the recovery. As long as it goes upward, people remain quite optimistic. It would be horrible if we had like 2 or 3 years of negative GDP growth, but I don't think, even in the worst scenario, even if there is a third wave, I don't think we're going to have this kind of horrible scenario. Okay, let's go to the next slide, because it tells us a little bit why the negative growth of Switzerland in the current year was not as bad as we feared in spring. It has to do with the diversification of exports, and maybe Switzerland in this respect is in a comfortable position. But don't forget, every country has quite a diversified export structure, unless it's just exporting maybe 1 or 2 resources. That, of course, that can happen. But usually emerging markets and advanced economies, they have a whole variety of exporting goods, and depending on the crisis, some of them are doing fairly well. And that's, in that respect, I think Switzerland is typical. What you see is let's start from below, is a spectacular collapse of the exports of watches. Uhren is watches. This is really a V recovery. It's not back to pre-crisis level. Okay, that's true, but nevertheless, you see how luxury and consumer goods that are not really system relevant, as we say,
please enjoy.
First save, but it's interesting. Once they have more money, once they have back their freedom to consume, they go back to these luxury goods. On the top, we have chemical and pharmaceutical products. It's doing very well. It grew spectacularly in 2018 and 2019, and we're still above the level of 2018. So this is a completely different good than watches. You have quite a stable demand side because of, it's mostly governments, hospitals, and of course they cannot stop importing pharmaceuticals from one day to another. So that's it, is balancing itself. Switzerland has about 50% of total exports in that sector. So this explains to a large extent why exports didn't collapse completely. And I have to say, I remember in the discussions in spring and early summer, people said, okay, we can do a lot in our country, but we cannot do anything about our exports, which is true. But because every country tried to restart the economy, let's say in May, June, of course, this stabilized the whole world economy. And again, looking from Switzerland, you see that almost every country really did a good job in restarting the economy in spite of the difficult circumstances. Let's go to the next slide. This shows you the geographical diversification of Switzerland. The U.S. Surprisingly became the most important export market for Switzerland in the last couple of years. Again, mostly due to pharmaceutical products. But it's interesting, just as a side remark, we don't have even a free trade agreement with the United States. We have lots of agreements with the EU. Nevertheless, growth of exports to the U.S. exploded, while you see in 2018-19, exports to Europe stagnated. So not everything depends on what kind of trade agreement you have. It probably depends much more on what you export. But then you see very parallel movement in all continents. And I think what this also shows is that in spite of the bad press, the U.S. is not doing so badly. I mean, when you read the press, you think it's just about to collapse the American economy, but that's not true. It's more or less parallel. Asia,
dramatically in the last few months,
United States and Canada and Europe. So it's a gradual difference maybe, but it's not a fundamental difference. There's no fundamental difference between the large export markets of Switzerland. All right, so let me wrap it up with some remarks. That will be the next slide. So we had the crisis management was fairly good. It was not perfect, of course. Switzerland profited from being a rich country. This is not typical. From a relatively low degree of inequality, which is not typical. Very good healthcare system, which is not typical. We have very good unemployment insurance for low schemes, so these partial or short-term unemployment benefits. And we have a very low debt ratio relative to GDP. So this is not typical. Maybe it's typical for
discuss networks,
Scandinavian countries, Switzerland, the Netherlands, Germany. But this maybe cannot be generalized to all of Europe. But the second point, I think, is my main point, is deglobalization is not an option for Switzerland. And as I would like to repeat, I don't see it as a realistic scenario for the next couple of years. I don't see that. Again, you have to see a profound, horrible
and have a drink afterwards
in years, but not a huge shock within 1 year. It's basically not even 1 year. It's basically so far just one quarter or maybe 2 quarters. But what's going to happen everywhere in Switzerland as well is we're going to have more reflection on global value chains and inventory holdings. But I wouldn't overestimate that. I think this is at the margin because it's just way too expensive to really relocate production from, let's say, Asia to Switzerland. This is not an option. What you could do is diversify within Asia, maybe diversify to some emerging African countries or to Latin America, Mexico. But I don't see a huge change, even though it's clear that enterprises, companies need to think about their global value chains a bit more carefully. And the government needs to think about having more stocks of, medical supplies. But this is not a game changer. Switzerland is in a very good position to cope with the second wave, and this would be my last slide. And this makes it really different than most countries in the world. Just concentrate on the focus on the black line and the right-hand side scale. You see the overall debt.
We were discussing
the lowest level of communities, cities. Second level is regions or cantons, and the federal level, if you count them together, even after having had a record high fiscal stimulus, we're still below 50% debt to GDP. So it's a very good position, and I expect that Switzerland will continue to increase its fiscal stimulus during the second wave. Probably not as much as during the first wave, but there is still room of maneuver, which gives them a lot of possibility to stabilize at least domestic demand. So that's my short talk. I don't say I'm optimistic, but I just want to say I don't expect huge structural changes at this point, even with the second wave. I think recovery will be delayed, but it's not going to change completely what we already know now, how the world is going to look in, let's say, 2 years. Thank you very much.
It's very sad, Tobias, because I wanted to say, that's great, somebody very optimistic like you. You are not too optimistic. And you said something about the debt level, and it's very interesting that our finance minister, Uli Maurer, warned that he will not spend another 30 billion to save businesses from the impact of the corona crisis. Now, when you say that debt levels are so low, he should invest much more, shouldn't he?
No, I don't think so. I think we should still spend some money, but we should focus much more than during the first wave. During the first wave, we were afraid everywhere. We were afraid of a systemic collapse, that, like a domino mechanism. And you had to make it very clear from the government that you're not going to allow this to happen. But now I think even with the second wave, there is no systemic risk that you have kind of an insolvency wave that drags down the whole economy. So I think now you can really focus on those companies that are basically still sound, but need just some bridging liquidity, or those companies which are really hit very hard by the lockdown measures. There you have an argument to spend more, but this together will be much, I think not much, but it will be less money than for the first wave. And secondly, this unemployment scheme, that will run until the end of 2021, which I think is a very good scheme, and companies can draw a lot from that. And actually, most of the expenditures of Switzerland during the first wave was for the unemployment benefits, and I think that's probably the best instrument to survive the second wave.
You said, and I agree, that we have managed the crisis quite well so far. But isn't it that we will see the real impact only 2021, or at the end even only one could have predicted that the...
Absolutely, that's true for every country. It's too early to tell, but still, I mean, we didn't have a complete lockdown during the first wave, which I think was appreciated by many people in this country. Nevertheless, we brought down the infection rate quite quickly. Let's see what's happening now. Of course, maybe in 3 months, this is completely wrong, I just said. But so far it was kind of a middle road that worked quite well, and I'm quite confident. And in this respect, I'm quite optimistic that you don't have to go for a complete lockdown to cope with the second wave. But we'll see.
Thank you so much, Tobias. We see us again also in the panel afterwards. Now, Corona is not only an economic, but foremost a health issue. even our sophisticated and very expensive health system was tested as never before. We also saw how vulnerable our society is. A man who was there at the first wave and is now coping with the second wave is Professor Dr. Med Filitar, who is the head of Infectious Diseases Service at the University Hospital in Basel and the Kantonsspital Basel-Land. He will join us now, as you see, from the hospital, because he is currently very busy in preparing for the worst and hoping for the best. Is that right, Philippe?
We're preparing for the worst, and we're not very hopeful that this will turn into the best. We just hope it's not going to turn out to be an overwhelming situation. So up to you now. We are very, very keen on hearing what you will be telling us. Thank you so much that you are here. Thank you, Kaspar, and thank you to the organizers. Now let me just get this. Here we go. So I was asked to talk a little bit about the lessons that we have learned from the first wave, and our hospital was transformed into a corona hospital, which means that all patients that did not have corona starting mid-March were transferred to our sister hospital, and all we did for 2 months was corona. So the lesson we learned, number one, is that corona did not go away during the summer. As we all see, there's the second wave that is coming back with a vengeance. And I think a reasonable assessment is that corona will stay with us for another few years. We don't believe that in 3 or 4 months or even 6 or 9 months, a vaccine will be here that will solve our corona problem. And then, you know, as you can tell here in July and August and early September, when case numbers were low, there was hope that population has somehow become immune to SARS-CoV-2. But in reality, there is no evidence that large parts of the population has any immunity. The best numbers are 10% in parts of Brooklyn, New York, parts of Italy, parts of Switzerland even, and there's some very, very limited places where more than 20 or 30% of the population are immune. But the vast majority of areas located in Europe are not immune. And yes, SARS-CoV-2 mutates, but it mutates slowly. There is no evidence right now that the mutations that we know of, that we have documented in the virus's genes, have made the virus more benign in comparison to the first wave. I am not an economist, but I'm a subscriber to The Economist, and I just wanted to point out this article from the latest edition, where a very interesting comparison was made with how soldiers work. And soldiers in warfare, they regularly have to deal with 4 forces that are called VUCA: volatility, uncertainty, complexity, and ambiguity. And that's exactly what we're dealing with now. Everything I say right now, I don't know if it's going to be true next week. And my experience doesn't really help me that much, because when the environment changes, everything sort of changes. And when there is chaos, which is what we're afraid of right now, bosses tend to display a tendency to hold on tight and take control. But those companies apparently that have invested for years already in building up leaders from the lowest ranks of the organization will perform better. And so the lesson number 2 that we have learned here in the hospital is you need good teams that are organized from the bottom up, that are used to working with each other, that know they can work well with each other. They will perform better. And the senior managers like myself, we need to learn to relinquish authority and let the junior members of our teams to use initiative and take decisions. So you need a good corona task force in your organization. You need obviously some senior person, typically a doctor, who liaises with the Department of Health. But we now no longer have the chief of human resources on our Corona task force, the chief of building and infrastructure, the chief pharmacist, and the chief pathologist. You need the people on your task force who really are going to be involved. So myself, the senior infectious disease expert, obviously you need him or her to update your protocols, how to treat the patients, to advise other doctors. And what we now also started doing, like in other places, there's somebody like myself who needs to decide on so-called quarantine exemptions, which means that personnel is allowed to work despite a quarantine order from the authorities. This obviously has to be coordinated with the authorities. And what is very important is that you have infection control nurses on the team, which deal with the protection of the personnel. And because they're nurses, they can advise and give orders to the nursing staff in a culturally more appropriate fashion than I, as a doctor, might be able to do it. Because nurses tend to perceive doctors as top-down, a little bit arrogant, oriented towards the disease, towards interventions, operations, and nurses tend to be more patient-oriented, at least in their own perception, which I more or less agree with. And it is the nurses who are most at risk of pandemic fatigue and burnout risk compared to the doctors, it seems. Actually, I can't see my slides the way I want them to, but I think this cannot be, no, this cannot be fixed. Okay. Employees should feel safe at work. Many of us feel safe when we wear what I was just wearing now, a normal surgical mask. And this is what our official Swiss guidelines recommend, even when we're treating corona patients. And now here you see our intensive care unit staff. They're wearing the tighter fitting FFP2 masks. But those are less comfortable to wear, especially when you're expected to wear them the whole day, an entire work shift of 8 hours, 10 hours, 12 hours. And these masks, in fact, in Switzerland at least, are only recommended for so-called aerosol generating procedures when you're ventilating a patient with these big masks that deliver lots of oxygen, when you're intubating the patient, when you're putting him on a breathing machine. But in most settings in the hospital, the normal surgical masks are sufficient. And there's another benefit to wearing a surgical mask that we should all be aware of. They might help us, if we're lucky, to get immunized to SARS-CoV-2, because presumably a minimal threshold amount of inhaled virus is necessary for me to get sick. And masks are likely to reduce the amount of virus that I breathe in to below this minimum threshold amount that is required to get sick. But the mask, by being not 100% protective, it may allow a certain number of viruses to pass through the mask, reach my body, and allow me to gradually become immune to SARS-CoV-2. There has not, unfortunately, been any therapeutic treatment breakthrough yet. So remdesivir that we keep reading about only reduces time to stabilization and or discharge of the patient from 15 to 10 days in large studies, but does not reduce mortality. And here you see patients with that require O2, oxygen. Remdesivir is slightly better as regards the proportion of patients that have recovered. It's better than placebo. But if you have a patient who does not require oxygen, which is a patient who is doing fairly well, you cannot even show that remdesivir does anything compared to placebo. And when a patient is doing really badly, really poorly, they're in the intensive care unit being mechanically ventilated, there also, it's probably too late for remdesivir to do anything that placebo cannot do. So the lesson 7 is actually the only medicine that reduces mortality is dexamethasone, which is a corticosteroid, a cortisone. And this is being used very extensively all over Europe. in patients who are hospitalized who require oxygen. And what we don't know yet so far is whether it will prevent some patients from having to go into intensive care. So in this big study from the UK, mortality was reduced by 17% with the use of dexamethasone. So from 24 to 21%. So that's a relative reduction of mortality of 17%. But please note that in patients who have no requirement for any oxygen, who are only mildly ill, the adverse effects of dexamethasone, of this cortisone, which suppresses your immune system, may actually cause the mortality to go up rather than down. So you've got to be very judicious, and you got to select your patients very well who you're going to give dexamethasone to. Lesson number 8 is, my prediction is that there will not be a so-called twindemic, a double pandemic of COVID-19 and influenza this coming winter. And why do I say this? I say this because in Australia, where it's winter when it's summer in Europe, so in June 2020 in Australia, the flu wave was extremely mild. So you see here 200 cases of influenza diagnosed in June 2020 compared to 57,000 flu cases diagnosed in June 2019. And this is something that has been noted in the entire Southern Hemisphere, so not only in Australia, but also in South America, in South Africa, where you see the flu season in previous years causing these peaks, whereas the flu season in 2020 essentially was a flat line in June, July, August, when it was winter in Argentina or in Australia or in South Africa. And why is this? Well, schools were closed. This is because it definitely points out that masks work. They protect not only against COVID-19, but obviously also against influenza and other viruses. And obviously, in June, July, there were other physical distancing measures in place in the Southern Hemisphere. Don't hold your breath as regards the protective action of the flu shot. It is not a very effective vaccine. So these are numbers by the
of Coface will give
that have estimated that you need to vaccinate 71 healthy adults under the age of 65 years to prevent one case of influenza, which we in medicine call the number needed to vaccinate. In people over 65 years old, you only, quote unquote, need to vaccinate 30, but there's a basic skepticism about whether the vaccine works at all in people over 65. I have another prediction to share with you. In my research spare time, I am the director of a national research program in Switzerland on the phenomenon of vaccine hesitancy. Everybody knows what vaccine hesitancy is, and we're working closely and productively and respectfully together with providers of complementary and alternative medicine, because we think that is where a lot of vaccine hesitancy is located, in terms with the goal of gaining more deep insights into this phenomenon. So this obviously has relevance to the ongoing clinical development and discussions regarding COVID-19 vaccines. And my prediction is this is a very tough one. So there's never been any vaccine developed against any coronavirus previously. No vaccine based on the current mRNA technology has ever been developed, and it's never happened so far in the history of medicine that a safe and effective vaccine has ever been brought to regulatory approval and to market in less than a year or even 2 or 3 years. This is a process that typically takes 5 or 10 or more years. And what you're reading in the media, that clinical vaccine trials have been interrupted because of some safety issue occurring in a vaccine trial participant. That's something completely normal and to be expected. So that's not a setback unless It keeps happening over and over, and there's a statistical signal that these side effects, quote unquote, are happening more frequently in the recipients of the vaccine compared to the recipients of the placebo vaccine. So in this setting where we don't know anything about any vaccine ever coming to the market that's safe and effective, in my view, as a vaccine hesitancy scientist, I think hesitancy towards corona vaccines is something completely normal. And so how can I be confident today about a vaccine about which I know nothing? So the utmost importance regards transparency and communication to convince the public that a coming coronavirus vaccine is safe and effective. And it's not just hard anti-vaxxers asking these tough questions. Mandatory COVID vaccination is out of the question in my view, but is a topic that is being actively prepared for in the United States. So my personal outlook, there's lots of uncertainties, and an accurate assessment of risk and prediction of what's going to happen over the next month or two is extremely difficult. I'm not sure that we'll successfully be able to avoid overwhelming caseloads in Swiss hospitals during the second corona wave. There's preliminary, somewhat reassuring evidence that shows slightly improved mortality data for hospitalized patients in the second wave. And they might just do better because they're younger on average than the patients during the first wave. And there's some mildly effective treatment available today that was not available in March and April, which is the antiviral remdesivir and the cortisone dexamethasone. It is impossible to distinguish whether a patient that is sitting in front of me has COVID-19 or influenza or other respiratory virus infection. So we will be doing lots of testing in the coming months. And a vaccine will not solve our COVID problem. We will continue to wear masks and do distancing for many more months to come, because the expectation is that a vaccine will only be partially protective. And as a last statement, good science costs a lot of money and takes a lot of time. So we need to be patient with expecting any medical breakthroughs coming in the next couple of months. Thank you for your attention.
Philip, thank you so much. Now you ask for patience, which is a really, really, really difficult thing. And I will ask you something. You said, and I agree, vaccine will not solve the problem. Now, you heard before that some people were saying we have to have mass immunity, and we have the Swedish model. So if vaccine is not really helping, is mass immunity helping?
Well, if you ask the question like that, of course the answer is yes, mass immunity will help. So if you let the population get infected with corona, most of them will develop some degree of immunity. We don't know yet whether they're going to be completely immune, and we don't know how long they're going to be immune for. So that's one part of the question. But the other answer to your question obviously is that many countries have realized that it's just simply too risky to pursue this herd immunity community protection strategy. If you let everybody get infected, you will be responsible for lots of preventable deaths. So the countries that I know of that have once talked about this strategy, the UK, Sweden, was also discussed in Switzerland. These countries have abandoned this strategy.
You had a very interesting learning for leaders in your presentation, which is special because you are more or less a medical expert, not in that case management experts. But you said something that leaders should relinquish power and hand over more power and trust to the lower ranks of the organization. What exactly meant you by this?
Well, what it means is, I can sit in my office and come up with great concepts, and I can say, well, the numbers of patients are going up, and I can put
impact has the pandemic
need to give me personnel so I can deal with my pandemic in my hospital. But teams don't work that well. You know, a good team that works productively together, those are the teams that know each other already. And those are the young folks. You know, I'm not that young anymore. It's not me who's standing at the bedside 12 hours a day. It's the young doctors, the young nurses that are working their behinds off at the bedside. We need to let them take decisions. If they want to feel safe, they want to have a say. If they want to avoid burnout, they need to be included in decision making.
Fantastic. Thank you so much. Very, very interesting. Dear participants, before we begin with the panel, I want to tell you again that you have this question and answer function where you can write a question. And if you want to give a hand and ask a question afterwards, we're going to do this after the panel that we start right now. So, gentlemen, thank you so much for being with me. I want to start with Tobias and Julien. Let's talk first about the obvious political risks we are facing. We expect a very, very messy presidential election in the US and a lot of resistance against strict COVID restrictions, as we have seen in Germany, as we have seen in Italy, that will parts of the economy again to a halt and threatens to leave people unemployed and also angry from what you have seen in the first wave. What can we or have we to expect? Julien, would you start, please?
So we have a very good question. And I mean, as I said during my presentation, the first problem is we don't start from zero. I mean, last year when we met, we were already highlighting this type of risk because people were frustrating in a lot of places because of already high unemployment and just to name a few reasons. And so now, in addition to all past frustration, we saw in a lot of places, and we saw what happened already in Latin America last year, in Hong Kong, in a lot of other places. Now you have to add this handling of the sanitary situation by authorities, and so of course this is a kind of a bad mix that is very likely to lead to a lot of political frustration. Another type of risk is, of course, I mean, in this type of situation, when the economic situation is bad, some leaders, some rulers are, as usually, inclined to try to make the population forget local economic issues by creating some geopolitical one externally. And this is what we see at the moment, again, in a lot of cases. So all of this is going to remain the same next year, especially in a lot of emerging marketplaces, because at least in Europe and in the US, we are quite lucky in the sense that central banks can buy a lot of government bonds and indirectly finance governments. This is what's happening. But the problem is it's not the same at all in a lot of developing countries. And at the moment, a lot of governments are thinking about their 2021 budget, and they have to finance it in those places. They can't only say, we're going to increase the deficit. And so they will have to decide some painful measure because they will have to cut some spending, and it is very likely to create some frustration again next year.
What is your view on that, Tobias? I think you have to unmute. I think you're still muted. Yeah.
Apologies. I fully agree with Julia. I think emerging markets, that's really dangerous because they don't have the fiscal space that we have in Europe and in Northern America. And I'm sure whoever is going to be elected in the US, you're going to see another fiscal stimulus after the elections if the economy slows down again or if there is a second recession. So I don't think that only the Biden administration, together with Democratic Congress, will go for a stimulus. In the spring, there was an agreement between Trump and the Democrats to have a stimulus. Just before the elections, it's difficult to find another agreement, but I'm quite optimistic. And I think the democracies in Europe and Northern America are quite robust. I think the recovery will not be more difficult than after the financial crisis. There, we also had to be very patient. It took several years, and you had of course political polarization, but in the end, all democracies were quite robust. Even in Greece, where we really had a horrible economic situation, in the end, democratic parties were still in the game. So yeah, so there will be some upheaval, but I'm really not so pessimistic.
Thank you, Philip. The balance between targeted health measures and the urgent need to keep economy going, that the economy is not stalling, is obviously extremely difficult. When you look now at the actual measures that have been decided here, but also in the countries around us, have we found the right mixture? And when you look into the future, what do we have to change to minimize the impact of this pandemic?
That's the million-dollar question, Caspar. So if you look what Bundeskanzlerin Angela Merkel decided yesterday and what the Swiss authorities and the French authorities decided, you can see that each country is taking a different road. So what Germany is doing is much more restrictive than what Switzerland has decided to do. So I guess there's not one single correct answer, but it does make me wonder, why are case numbers in Germany much lower than they are in Switzerland? Well,
is there any answer to that? Because that's a question that I hear all the time. Is there an answer?
I'm convinced that their numbers in Germany are lower because they have been much more restrictive. And again, I'm not an economist, but what I hear is that, you know, you're going to protect the economy much better if you save the society from having an overwhelming corona wave as we are expecting in Switzerland. If you keep restrictions in place, even during the summer, as Germany did, you're going to have a milder second wave. And I think that's exactly what we're seeing now.
Okay, very interesting. You know, Tobias, you talked about the democratic parties and everything that worked quite well. But my impression sometimes was that authoritarian regimes were a little bit better coping with this crisis, because when you look at China, these people are used to obey. Everywhere you go, they know that if the state is something and says something, you have to follow. Don't you think that in a way it shows that democratic countries have problems with coping because they always look for freedom and are not really coping well when there are restrictions?
Yeah, well, that's true, but I mean, China is not a typical authoritarian regime. It's a highly authoritarian regime, and if you look at, for instance, at Iran is also not authoritarian regime, and it did a very poor job. So I would really
definitely not least how the
authoritarian regimes. And regarding the democracies, I mean, first of all, we don't have a choice. We are democracies, and I think we want to keep that. And secondly, just Philip said, I mean, we see even in democracies, we see a huge variety of solutions. So democracy doesn't fully determine what you're allowed to do. I mean, the French were very resolute, the Italians, surprisingly, or the Spanish were very restrictive during the first wave. So in a way, in the first wave, we all just more or less imitated the Chinese model, which was lockdown. We just afterwards we couldn't, you know, maintain it as long and as brutally, let's say, as the Chinese. But the first reaction was very similar.
Yeah, because you live in France. There were very, very strict measures in the first wave. There are again very, very strict measures, but still the infection rate is very high. Is there for you an explanation why this happens?
I mean, I'm not a doctor, at least not in medicine, but in economics only. So it's hard to say. But I would say to me, like the key point is not necessarily the difference between democracy and autocracy. It's more like the fastness of the response. I mean, of course, China was fast to react, but New Zealand was also fast to react, and it's a democracy.
Yeah.
And this is also perhaps the reason why in France the situation is not so good. I mean, it's like perhaps we should have reacted faster and stronger. And again, I'm not an expert, but it seems to me when I look at the data, it looks like countries that reacted strongly by deciding some targeted but fast, even strict lockdown, even though there were only a few cases. In the end, like New Zealand, it looks like at this stage it has been less painful than countries that started first to contain it without being too strict and too tough. But it looks like if you do it later, it has to be stronger and longer, so more painful.
Philip, when we look at our health systems, are we not well prepared for this crisis? And when the next virus would be an Ebola virus, what would happen then?
You know, nobody wants to ask themselves this question really, because Ebola is much more contagious and much more lethal than what we've been dealing with in terms of pandemics this year and in 2009 when there was the H1N1 swine flu pandemic. So in 2014, there was the scare that the West African Ebola epidemic might spill over into Europe, which it, thank goodness, never did. But we were very nervous. I can't give you much more detail than then, but you know, as an example, today we're wearing these cheap, easy to wear masks. We're wearing the yellow paper gowns. We might wear some glasses. This is relatively easy compared to wearing these space suits, these Tyco suits when you're treating an Ebola patient. So it's just much harder to do a good job and keep from getting infected yourself when you're treating an Ebola patient compared to a COVID-19 patient. That's just an example.
Okay. Tobias, everywhere the state is now playing a very active role and interferes with the private sector. The left obviously supports this move because they are criticizing our system that benefits the rich and punishes the poor. Are we on the way to a more state-run economy?
I don't think so. No, I think this is temporary, and I think that we see a trend towards regulation in every part of our life, not just in the economy. But that's a long-term trend that started, I would say, the 1990s, and maybe this is being accelerated a little bit. But I don't see. I don't see big nationalization moves right now. No, I know this is very controversial, but I think this is really temporary. But I could be wrong. But I think it's. I mean, we're really in a very special crisis, and the government has to play a very important role right now, and that's why people support it, and not because they think the government can solve every solution. But sure, there is a long-term trend towards more regulation, independently from the COVID crisis. We could talk about that, but I think this is not on the top of the agenda right now.
Okay. So Julien, the debt level is alarmingly high, but no one really seems to care. How dangerous at the end is the debt level for the future stability of the market?
I mean, this question is very linked to the previous one. I think like 10 years ago, we had the same type of question right after the Lehman crisis. And central banks started to buy more bonds, what we named quantitative easing. And at that time, I mean, everybody said, this is temporary, this is a short-term answer to this crisis. And more than 10 years later, I mean,
at the Universitätsspital Basel,
bonds, they can't exit quantitative easing, and they even have to do more now. And to me, I mean, this comparison is valid with what's going on with this crisis, with like guaranteed loans, for instance.
Mm-hmm.
I mean, we have started to do it, but we don't know when we can exit it. And once you have started to do it, it's very hard to know exactly if you can stop it. So I would tend to disagree with Tobias on this point. And going back directly to the question, it means that in a lot of countries, especially in Europe and in the US, do we have to be worried about public debt levels? I think since we're in it now, we have to distinguish two types of public debt. You have to distinguish public debt which is held by central banks, like the ECB in the Eurozone, and the rest of public debt, which is held by private creditors. And we are almost 100% sure that the part of the public debt which is held by central banks, we will not have any issues to refinance it. And if we exclude this part of the debt, the debt level is much lower now. So that's why solvability of states, it's not the biggest issue at the moment, I think, and it will not be, at least in Europe and in the US in the years to come. But again, the story is very different in a lot of developing and emerging markets where we can have some defaults from next year, of course.
Mm-hmm. Philip, I know you have no crystal ball, as no one has this crystal ball, but realistically, when can we expect a vaccine, and when will at least the worst health crisis be over so that you have to work less and sleep more? You have to unmute. Sorry.
Yeah, this is a tough question, as you said, Caspar. So, most people expect a first vaccine to hit the market in the next maybe 6 months, but this first vaccine probably will not be near 80 or 90% effective as we would all hope it to be. So what if you have a vaccine that's 40 or 50% effective? Well, you don't know if you're going to be protected. It means you cannot really change your behavior. You will still have to wear a mask. But it might, those 50%, let's say it's 50%, the 50% efficacy of the vaccine will probably make you immune for a little while. And again, if we have a vaccine that comes to the market in February and then somebody asks me, well, how long is it going to be protective? The answer is nobody knows, because we haven't had enough months to follow patients or people who have been vaccinated. So if you want to know if the protection is long-lived, well, you got to wait, right? You got to wait for months and months and months and see if the protective level of antibodies in your serum stays horizontal or whether it trends downward. Then you can make predictions, right? So I think it's going to be tough. I hope there's going to be I predict there's going to be a partial protection and a partial help towards ending the pandemic somewhere in Q1 or Q2 of next year. But I'm not sure we'll be able to change our behavior in terms of masks and distancing until we're very sure that the vaccine actually does protect me for many months to come.
So it's not a game changer, but only another puzzle stone to ease the spread of the virus.
That sounds about right. And I hope I'm wrong. Maybe in February there will be a vaccine that induces very high antibodies that 2 months later are still up there, and the antibodies are of the type that in the laboratory is able to neutralize the virus. That would be very exciting news, and there might be a game changer. Obviously, I'm hoping for a game-changing vaccine, but I'm not holding my breath.
Absolutely. So before we begin with the questions of our participants, to all of you, I will ask the question that for me is the most important in this crisis. Will we ever come back from the new normal to the old normal? Will we fly? Will we hug? And will we return to our offices again? Let's start with Julia.
I think I'm going to disappoint you, but economists are not the right person to tell you to answer this question, even though it relates to economics. I mean, as I said very briefly, I think to me, again, I'm not an expert, but it seems to me that this crisis is accelerating past structural changes in terms of political risk. We talked a lot about it. In terms of digitalization, also in terms of moving to renewable energies, because I mean, oil prices are so low that now all major companies are moving faster than expected even last year to renewable energies. So in that sense, it means that we will never go back to the pre-crisis world. But again, I mean, it also depends a lot from the sanitary situation, and I'm not the expert to answer this question.
Tobias? You have to unmute, please. Yeah.
No, I did. It is. Do you hear me? It's unmuted. Okay. Well, I'm not an expert either, but I'm a historian, and so far after every pandemic, people went back to hugging, and it seems to be very unlikely that we don't shake hands anymore. But maybe not in the next 2 or 3 years, but eventually we'll go back, because this is a human need. You cannot run around like this for the next 50 years. This is just impossible. But it takes a while. But after every pandemic, people went back to their old habits. So I don't think that this is different this time.
Philip, you are the expert, so you have to have an answer.
Yeah, I'm not the cold and arrogant doctor that you might think that I am. No, I completely agree with Tobias. We will go back to hugging. I'm not sure about the handshaking. Maybe people are going to get used to the elbow thump or whatever we call it. I don't know. But I completely agree. The human sentiments, the human emotions are so important. After every pandemic, normality has returned. And the big question, obviously, is this going to be in 6 months or in 6 years? So it's probably going to be somewhere in between.
Okay, let's rather hope for 6 months. Thank you very much, guys, for this fantastic input. Now, dear participants, ladies and gentlemen, it's up to you to ask your questions. And I have to relate to our host whether she could put in somebody who would like to ask a first question. Leticia,
yes,
is that possible?
We have somebody called Clementina de Paula. I will give you the mic, madam.
Please.
Can you hear us? Huh. Maybe we can take let's say one question, Caspar, and maybe Clementina will be able to unmute her, and maybe she'll be able to ask her question. Okay?
Yep. I have a written question. Would the restrictions have been the same if COVID appeared 20 years ago? Are these restrictions and reactions impacted by the improved connectivity, Philip? Philip?
I have a tough time answering the question. Let's ask our historian, I would say. What does Tobias think?
Thanks. 20 years ago, maybe not. But I think 50 years ago, I think there was this Hong Kong flu, which was quite strong. Maybe you can think that was a different time, but I think 20 years ago we probably would have reacted quite similarly. But of course, the reaction is always depends on the historical period. 100 years ago, this Spanish flu was enormously dangerous, and they did some social distancing and all that, but it was in the last period of the war. You had revolutions and all that, and I mean that was a completely different historical context, and they did a lot of mistakes that I think we avoided this time.
Now a question to you, Philip. Why are the cases numbers so much higher in the French-speaking cantons?
That's a good question too. That I can't really answer that. People have said, well, it has to do with the French cantons being on the border, and they have lots of influx from say France, or the Ticino in Switzerland is on the border to Italy, and they have a large influx of Italian workers that come in every day with their cars. But Basel is also on the French and German border, and the numbers are rather low, or they still are quite low in the Basel area. So I don't know, and I'm not that much of a sociologist that I could say that the mentality is so much different, that the French-speaking Swiss do much more hugging or handshaking, or they don't follow the rules that the German Swiss would follow. I just don't know.
Yeah, I didn't seem that the Germans are really following more, but whatever. What about the effectiveness of track and trace in the various economies? Presumably, those countries that have effective mechanism in place are able to manage the situation more effectively. Would you agree?
I would definitely agree. Yeah, I don't think there's any doubt regarding this argument. So contact tracing, it works. The problem right now is not that it's not working, it's that it's not working anymore, because the caseload is just so high. So between the end of the first wave and now, the public health departments everywhere have increased their personnel. They can do much more contact tracing today than they were able to handle in April and May. But the cases have just gone up even more than the public health departments have been able to hire personnel. And you also got to train these personnel. And the other thing is, it takes a lot of time. I remember in March, I was making phone calls myself at 9 o'clock, at 10 o'clock in the evening. And when you're telling somebody they have COVID, they have a million questions. And then you tell them about what their wife or husband and children and brothers and sisters they live with, and what the rules are that these contacts are supposed to follow,
and put them to the result.
Just takes 45 minutes. So if you're dealing with 8 or 9 cases every day, that is a full day. You cannot deal with 20 or 30 cases every day.
Absolutely. There's a related question. Is there a good way to compare the first and the second wave in terms of number, quality, and experience in testing? Very, very important question.
Well, there was a little bit of confusion during the first wave whether you could do the swab from the pharynx, from the back of your throat. And I think the agreement now is that those tests are not as good as the ones you do at the back of the nose. You might
have
1 in 5, 1 in 10 cases that you would have picked up if you had done the test in the nose. Otherwise, we're not much further today. The rapid tests, they have the same limitation. They occasionally miss a test that would have not been missed if you had done the PCR-based test. But the advantage of the rapid tests that is going to emerge, I think, in the next 1 or 2 or 3 months is that you can repeat the tests very often. They're cheap. You get the result rapidly. You can react rapidly. If somebody's tested positive, you don't wait 4 or 24 hours for the result. So you have the result after a rapid test in 15, 20 minutes. So that will be a game changer, but you got to be aware of the cases you're going to miss, like President Trump's environment. People had access to the White House only if they had a negative rapid test. Yeah. But that gave them false reassurance, and they came in without a mask, even though they had it.
Okay. Now, Letitia, I have to ask you, could we make the connection?
I'll try again, Caspar.
Yes, thank you so much.
So now, Clementina, you have the floor. Can you hear us?
Edition of the Country Risk Conference.
It's not that it doesn't work. I have the feeling that she doesn't hear us.
Okay. So in that case, ladies and gentlemen, dear participants, and obviously, thank you so much all the speakers and panelists for this very, very insightful meeting, for this fantastic event. This Country Risk Conference 2020, we will always remember and never forget. I say now goodbye, but I hand over for the last words to Wolfgang Mohr. He is Coface Cooperation Director in Switzerland. So Wolfgang, the screen and the microphone is yours.
Thank you very much, Caspar. So yeah, very interesting presentations. Thank you very much to everybody. I have the pleasure to contribute a little bit from the other side of the Röstigraben, being myself placed in Lausanne, to thank all the speakers, Julien, Mr. Professor Tobias Sherman, and Mr. Philippe Tarr, for the very interesting insights they gave us. A big thank you also to you, Caspar. As usual, you assured an exciting and lively event. Thank you very much for this. In addition, I'd also like to thank our marketing responsible, Heiner Lang, who organized all the event. And of course, also a thank you goes to Laetitia Rosset, who managed through the presentations. Please note that all the participants will receive a questionnaire from Coface Switzerland in the coming days, asking to access this event. Your opinion is important to us, and of course, we would like to know where we can improve, so your feedback is highly appreciated, and we would be grateful you took the time to provide us this. And normally now would be the moment to hand over some presents to the speakers and to Caspar, of course, and to mingle in the frame of an aperitif. As Peter mentioned, and also Caspar already in the beginning, both is unfortunately not possible this year, and it's even more regrettable as Coface Switzerland could have celebrated its 25th anniversary, which actually took place last week. So we will certainly perhaps try to renew this next year. We have done the celebrated 26th. It's a pity, but we cannot change the facts. Looking at the remarks, especially made by Professor Tarr, I just became a little bit doubtful regarding personal meetings, at least with high numbers of participants, even throughout 2021. So nevertheless, if ever possible, from a sanitary perspective, we are, or let's say we would be looking forward to meeting you next year for physical Coface Country Risk Conference, followed by an aperitif, of course. Let's keep fingers crossed that it will be possible. And in the name of the whole Coface team, I thank you all very much for your participation and wish you all the best to manage and to overcome this unprecedented period. Stay healthy and take care. And to close like Peter started, au revoir, arrivederci, auf Wiedersehen, and goodbye. Thank you.